Hey guys, Steve here with the strategy session for July 21st, 2014. Hope you all had a great Monday. We're going to take a quick look at the market. S&P 500 futures here. Really consolidating as we've identified the last, I would say, week or so. Hasn't really moved. Broke that trend line based on time, not price. So, we're really consolidating for now. We could maybe consolidate throughout earnings. I don't know. But for right now, it's a good sign. I look at it as a good sign to be consolidating for this length of time. Because maybe what's happening now is people that did get long down here, maybe there's a little bit of profit taking, but maybe there's also some new buyers stepping in to really hold up the market and maybe make another push higher. As you can see on the weekly chart, this channel has been extending from the end of 2012, and we're pushing up into the top of the channel, but we probably do have a little bit of room, maybe over 2000, and that could be a psychological barrier as well. 2000 being a break above 2000. I think that's probably all-time highs for the market. So let's take a quick look at our positions that we have. Today, the first thing I want to go over is our entry in Honeywell that we identified in the weekend update. So we got actually a pretty good fill right around this 96.70 level at the open. So, and then as the day went on, Honeywell actually moved higher, really solidifying this breakout outside of this weekly consolidation area. So for right now, our stop is 92.91. So actually $93. My alert wants to go there. So $93 is the alert for a close below. That would be our trigger to exit the position. As of right now, though, it was a good fill, good start to the trade. I like to see that this is a nice breakout. Never really came back and tested this 95.50 area, which is also a good sign. So the rest of our positions, Apple reports tomorrow, I believe. So we had this, what looks like maybe a bounce off of this trend line. However, today, along with the market, it was down a little bit. So the same thing after the breakout, really just consolidating right around that resistance area. So maybe earnings is the push it needs to move higher. Maybe people are not confident in the quarter. For us, that really doesn't matter. We don't look at any of that stuff. I couldn't tell you about gross margins or year over date, whatever, sales. All I know is price is moving higher, trend is moving higher. I want to be long. One thing that does concern me is if you draw this channel in here, that we are pushing against the resistance of the channel. So potentially maybe this wants to either move sideways or come back down into this 87 level. But the first thing it has to do in order to do that would be to break this $90 level, which would be our exit from the trade. American Tower. Oh, I'm sorry, I missed one. ADM, Archer Daniels Midland. This is one we discussed in the free trade idea. So if you haven't seen that, make sure you check that out. I'll put a link in the post to make it easier to get over there. But one thing I want to discuss is, there's a couple different ways to take some trades, and I discussed this in the free trade idea. But I know when we looked at this on Saturday, we identified this area as a potential consolidation and a move higher, and now maybe this is another consolidation and a move higher. So if you're an aggressive trader, you can put your stop here at 45.87, and if we get another breakout over this $48 level, you can bring your stop all the way up here. I'm a little bit of a longer term investor, so I don't mind, if this came back down to say 45.22 and then rallied to 55, obviously that, for me, I'm okay with that. But it's all depending on what kind of investor you are and what kind of trader you are. But for the free trade idea, I discussed potentially putting a stop here at 45.90, then at 47.29 if we get a breakout, and that's fine. If that's a much shorter term, much more aggressive play. You're not going to get probably the 20-30% returns, but you may consistently pick up a solid 5% a trade. So it's all depending on what kind of investor you are. So for us right now, our stop is right at this breakout level, which is also happens to be trendline support. American Tower consolidating since our breakout, since our entry. Had a nice move on Friday higher, had a new breakout. We moved stop to this 90.80 level because basically at this point we would get a breakdown below 90.80, and that would also break trend line and the previous resistance area. Amazon was higher for today, one of our few, just trending higher. I believe earnings for this are Thursday 24th, which is Thursday, I believe. So, not a lot of movement, a little bit of a consolidation. So maybe this wants to come back and test the breakout area, maybe not. We'll see what happens. EQR, same thing, really last 4 days has gone sideways. Not much doing there. Weekly trend, obviously very strong. So, eventually I'd like to be able to move stop to this 62.95, or I'm sorry, 62.95. Having a rough time today. Fidelity moved higher. Really, last 4 days gone sideways. Similar EQR, we were able to move stop to 54.60 because that puts us below a trend line if we break that. So for that one, not much doing. Again, that has earnings, looks like the 29th, so a week from tomorrow. Honeywell we discussed. Mondelez, we had maybe what I would consider a false breakout on our entry. Really has gone sideways since. So the first sign of trouble would be a break of this trend line here. And then obviously the confirmation would be a break of 37, meaning that this would be a top, a blow off top, and we would be reversing, coming back potentially into this trend line around the $36 level. Last one, Wyndham. Again, similar to Apple, really moved sideways since our entry, but we had a good entry on this 10th here, so we're actually up a little bit on the trade. Earnings again are the 24th, so the same day as Amazon. So Amazon and Wyndham will be reporting on Thursday. A couple trades that did trigger today. No, I'm sorry, not trades. Alerts that triggered today was Genuine Parts. Obviously, that triggered this morning. Looks like it had earnings this morning, so it broke out, closed lower. So for right now, we're going to reset our alert to this 89.14 level. See if we can get a move back above 89.14. The other one that went off this afternoon was Northrop Grumman. Looks like it poked its head above, but closed slightly below. So I'm going to actually put this alert a little bit higher at the 126 level. That one has earnings on the 22nd, and that's in the same sector as Honeywell. They're both some defense names. So I don't know if we would necessarily take a position in that, just to try and keep the portfolio somewhat diversified. And the last thing I want to go over is a trade that I personally had in Facebook, just to show you that everything doesn't always work out as planned. So here was the trade in Facebook. This is what I identified earlier. I actually got in on this breakout here. So I looked at it. Let's remove this for a minute. So I looked at this small consolidation. I entered the trade. We consolidated a little bit longer. Got another breakout. So my stop actually moved to, and this was because I was being aggressive. So stop actually moved to 63.81, next breakout. And then what happened was there was this trend line. So we broke this trend line, and I assumed, okay, we'll come back in, test the 63.80, and then bounce higher. So I actually got stopped out. My system identified the exit on the 8th. I sold it at the open on the 9th, 63.38. And of course today it's at 69.40. And it was triggering, if we didn't have earnings, this would have triggered a new trade for us. So I just want to show you that there's different ways to trade it. And they're not always, some ways may be better, some ways may, take some profit off the table. But everybody has losers, and this is one of my losers. So I actually entered at 65.73, and I got stopped out at 63.29. So $2 loss. I had the position was the right size, so it wasn't a big deal. I mean, it's frustrating, but the fact is, once you can get past, I traded my system, and it just happens to be that it didn't work out. So that's an easier loss for me to take than if I took a loss because I didn't follow my system and my plan. So of course, I would have loved to get back in on our trigger from Friday. I would have loved to get back in today, but because there's earnings on the 23rd, which is Wednesday, I'm going to pass. So if I missed a trade, so be it. I missed a trade. But this is a point going back to the ADM trade about how there's two different types of investors and two different types of traders. I was aggressive on this because I owned call options on it. So I wanted to trail my stop as quick as possible. So this was, how I did this. If I had stock in it and it was more for a longer term, then maybe I would have identified more along the lines of this lower trend line, and my stop would have stayed at $62. So a bunch of different ways to look at it. It all depends on your time frame. With that said, guys, have a great night. If you haven't already, please get over the free trade idea. Again, I'll put a link below the post, below the video. And please follow me on StockTwits Twitter and subscribe to the YouTube channel. All right, guys, have a great night.